The world of private spaceflight is accelerating, and with it, a host of entirely new legal and financial questions. One that is top of mind for space tourists and industry players is, are spaceship returns taxable? The answer is generally yes, but the details are literally out of this world. For the private spaceflight companies themselves, like those offering satellite launches or space tourism, the income they generate from these activities is treated like any other business income and is subject to corporate income tax in their country of residence. This is where things get tricky, as current international tax treaties weren't designed for operations performed in the vacuum of space. For the wealthy individual paying for a suborbital or orbital joyride, the cost of the ticket itself is not a taxable return, as it is an expense, not income. However, the taxation of prizes won for trips to space, or income earned from commercial activity performed in space, is less clear and depends heavily on existing national tax law, such as the U.S. Internal Revenue Code. U.S. law, for instance, has specific rules for space and ocean income, which generally treats income derived by a U.S. person from space activity as U.S.-sourced income, and thus taxable. Income sourced from activities in a foreign country is treated as foreign-sourced income. This creates a complex apportionment challenge, as a spaceflight begins in one country, operates in a foreign area, and returns to another. In the absence of a comprehensive international space tax treaty, the current approach relies on domestic tax codes and existing agreements to determine tax residency and income sourcing. This leaves a gray area that tax authorities and space companies are actively navigating. As space activity becomes more commercial, expect governments to clarify and tighten these rules. For now, every passenger and private entity should consult with a tax expert familiar with international and emerging space law.